Welcome to the June 12th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and President, McGowan Group Wealth Management, a team of 10. The team that cares, serving affluent families right from the Crescent here in Dallas. You can actually go to NetWorthRadio.com and set your time for a brainstorming session to upgrade your financial plan from a team dedicated to your financial success. Be sure to subscribe, and we're going to cover some important news ahead for the U.S. economy. And there was a big shift this week. We'll cover a few things that actually give you guidance on what things look like for 2023 second half and 2024. This is the commodity index. You can see the huge spike right after the invasion, the Russian invasion of Ukraine. That spike drove inflation. Since that time, we've come back down substantially, about 20% on the commodity prices. And if you go 5 years, you're looking at under 4% commodity inflation. That is part of the projection for what happens with the Federal Reserve tightening cycle. They are likely to stop next week or this week. They're likely to stop or may go up one more time, but the journey ahead is actually disinflation, and we've been saying that since July. Well, the Federal Reserve, when they reverse the cycle, they reflate the value of good assets, and we'll cover a few of the choices here. So, with this, the Dow Jones Industrial Average. There's a more important story on the S&P 500, but I want to illustrate March. There's the bank failures, the recovery from that. Now the Dow back at about 34,000. That's up 3.5% total return for the year. S&P 500 has now retraced a 20% gain from the October lows. That means that by official definition, that the bear market cycle is at least temporarily over. Wow, how would we have known that the bear market cycle bottomed in September? Now, they never ring a bell, but we kept adding great assets, reinvesting cash flow, and I'll show you a couple of the sectors that we like and we continue to hold in the portfolios. So here, this is one of the reasons that you're not seeing a continued bear market at this point. Atlanta Fed, we cover this. We've been covering this weekly because what the headlines have said for over a year is recession, 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 recession. Then we get the real data and it's recession not. So if you're anticipating something that isn't true yet, it's important to look at your thesis and say, well, it doesn't appear to be a recession. Goldman Sachs, Jan Hatzius came out and said, hey, we lowered our probability of a recession to just 25%. And Goldman's pretty good at that sort of thing. Atlanta Fed says 2.2% economic growth right here in the second quarter. And they've got over 2/3 of the quarter already logged into their system, and they're usually more accurate than the Bloomberg economists. We cover this each week because we want to know what's happening in the economy right now. That's the most important thing. Plus 2.2%, it's not huge growth, but it's not the dreaded recession. And we may have built in a recession that didn't happen. So these are T-bills. This is going to closely follow what the Federal Reserve sets as the overnight bank lending rate. 5.1% down from 5.25%. That says they may not go up next week. 77% probability they don't go up anymore. But what happens after that? The commodities I showed you and the other inflation numbers, the biggest inflation month between now and July, biggest inflation month was June of 22, and it drops off the trailing 12 months. It's likely to put inflation down here at about 3.5%. That's about where the treasuries are. So instead of recession causing the inversion of the yield curve, short rates higher than long rates, 10-year Treasury, 30-year Treasury, just below 4%. Well, it may be that other people have looked at the data I showed you, and if you drop off the two big inflation months of May and June 22, you're going to be at about 3.5%, meaning they're too tight. So in 2024, highly likely, rates start to head back to normal, and it reflates the value of great assets, especially assets that pay more than 5% cash flow. Let's look at one of them. Here, I wanted to see what's the total return from a well-managed energy infrastructure fund for the last 5 years. So this goes back to 2017. With dividends, total return just under 7%. Through all the turbulence and, of course, the shutdown, there's about a 7% average. Right now, it's got about a 7% yield. And so the pipeline energy infrastructure could be one of the best inflation hedges, as it has been historically. The other categories, which right now are bargain status based upon cash flow and discounts to par value, would be the global high yield area. And we still like the medical dividend companies, rising dividends, and technology innovation from the medical side. If you'd like to come down, get an upgrade to your plan, or set a time for the Zoom meeting, you just go to networthradio.com, click Contact Us, and name your time. We'll be happy to upgrade your plan for 2024. Thank you for tuning in to Net Worth Media today, and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.